Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on what Fed has delivered and along with that, key sectors and stocks that one should be focusing on. Now, indeed, the rising crude prices and strengthening dollar index has led to acceleration of profit booking in Nifty as well as Bank Nifty yesterday, and it was more lethal because of the impact of selling pressure of HDFC Bank on Bank Nifty. Now, while HDFC Bank closed 4% negative and Reliance closed 2% negative, this has led to both the indices Nifty and Bank Nifty close around 1.2% negative apiece. Now, what supported the indices yesterday were the CPSE stocks once again for the likes of ONGC, Coal India, Power Grid, and even say Sun Pharma from the pharma space and TCS from the IT space. So all these stocks have supported the indices and tried to do a balancing act yesterday. Now buying support at lower levels was also missing yesterday on account of the apprehension ahead of the Fed policy outcome later in the night. Now let's also see what the Fed has announced. The stance of the Fed FOMC was more hawkish than expected. Although Fed has left interest rates unchanged at 5.5% and maintained status quo, but it has outlined a possibility of one more rate hike in 2023 and also stated that the rates are expected to stay at elevated levels for longer in 2024 and 25. So this is more hawkish than it was expected, and hence it is positive for the dollar index, which has again moved beyond 105.5, and this could in turn impact the Indian rupee negatively against the USD. So just watch out for that. Now, yesterday, most of the sectors ended the day in the red. Within the banking space, now we feel that there would be a clear demarcation between HDFC Bank and Kotak Bank against ICICI Bank and Axis Bank. If we look at the price action of both of all these four stocks within the last 1.5 months. Now, the later names, ICICI Bank and Axis Bank, could witness outperformance from here on also and could continue their uptrend and try to play a balancing role to support Bank Nifty at lower levels. Now, coming to Nifty levels, there are two crucial support levels now from here on. The first support being 19,730, 19,750 zone, which is the 50% retracement of the entire up move from 19,225 to 20,222, which is the recent swing high. The next support would be 19,625, which is a 61% retracement. And generally, in a bigger uptrend, these indices tend to take support anywhere between 50% retracement and the 61% retracement. So we feel that this 19,625, 19,725 kind of zone could act as an important support. Now, last few sessions, of course, we have seen profit booking from higher levels, but let's be clear of one thing. This is a bigger uptrend, and within the uptrend, there would be minor profit booking moves or some choppy moves like these to the tune of 3 to 4% of the index levels. So we have to be prepared for that after a bigger rally that we've already witnessed. Now, on the upside, what are the key levels crossing which we could be at least a bit sure that now that the profit booking mode of the indices are ending and markets could once again move on the way up. So that level I feel that would be around 20,030, 20,050 levels, which could now act as a key resistance on the upside, and above which once index moves the trend could strengthen up to 20,250, 20,300, which could be the new all-time highs. So two important levels for us for the next few days. One is the support zone of 19,625 and 19,725, and the second important level would be the resistance of 20,050. So both these numbers have to be crystal clear in your mind while you are trading. Now, if we see the weekly option chain, highest call writing is visible in 20,000 strikes, while put writing is visible in 19,900 and 19,800 strikes. Now, this implies that 19,730 could be the most important support for the day from the expiry perspective. And on the upside, 20,000, 20,050 levels could act as a strong resistance. Now, coming to Bank Nifty, Key support for Bank Nifty lies at 44,900 levels, which is the 50% retracement of the entire move of August lows around 43,600 to the recent highs of 46,310. So if we take this entire move, the 50% move happens to be 44,900 levels, which could act as an important support from here on. And we expect the banking index to take support around 44,850, 44,900 zone and try to rebound towards 45,600, 45,800 levels in on the upside. Now below 44,850, the index could continue its down move up to 44,550, 44,500 levels. Now if we look at the open interest data, there is significant open interest built up from the fresh expiry perspective of next week. Now that open interest data is built up in 45,500 calls as well as puts, and if we adjust both the premiums, the trading range comes out to be 44,800, 44,850 on the downside and 46,100, 46,000 on the upside. So the range could be 44,800 to 46,100 from a bank nifty perspective. Now, if we observe the FII data, FIIs have been net sellers in cash to the tune of 3,111 crores, while DIIs have also sold to the tune of 573 crores. So, both FIIs and DIIs have been sellers in the cash segment. FII's long short ratio for index futures has dipped to 60% from the 65% levels, which is it was sustaining since past few days. So now there is some kind of a profit booking mode that the FIIs have activated. They've also sold index futures. The FIIs have also sold index futures to the tune of 25,000 contracts. They've sold stock futures to the tune of roughly 12,000 contracts. On index options front, FIIs have sold 1,46,000 call option contracts, while they've also sold 96,000 put contracts also. Now, this looking at this overall data of the FIIs in the derivative segment, it is negative and could be a scenario that the FIIs are partially unwinding or rather booking their booking profit in their long positions. And the fact that they've sold 1.46 lakh contracts of index call options is crucial and indicative of selling pressure on rises. But on the other hand, selling almost 1 lakh contracts of puts is also hinting that, say, a level around 19,600, 19,700, this profit booking move could end and then the index could take support at lower levels and trade range bound before making a move on the upside. So along with selling call options, selling put options is also crucial, and we need to see both the data and see these data points for the next few days also going into the expiry week. So just to summarize, we expect the index to take support around 19,650, 19,750 levels on the downside, and the resistance could be witnessed at 20,050 levels, while for the bank nifty the key support zone would be 44,800, 44,900 on the downside, and the resistance could be 45,700 to 46,000 on the upside. And one needs to be a bit selective in terms of stocks for the next few sessions. Stay a bit light, let the markets give you a signal that the downtrend or the profit booking move is ending, and then one can start lapping up their stocks, at least good quality names and not any junk names. So just be a bit wary of the quality and be a bit selective in terms of stock picking for the next few sessions. So friends, that's all for today. Thank you all for regularly listening to our podcast and giving us so much love. We hope you are finding the podcast useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Thank you all once again.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.